Welcome, curious minds, to another deep dive. Today we're plunging into real-world asset tokenization, RWA tokenization.
Yeah, it's generating a massive buzz right now.
Definitely. And it seems fueled by, serious institutional interest and clearer rules emerging. We've even heard whispers of some RWA tokens maybe seeing huge gains by 2026.
Right, but beyond the hype, what's fascinating is seeing traditional finance players like BlackRock with on-chain funds really leaning into blockchain. New laws are helping too.
So our mission today is pretty clear. Unpack what this actually means, why it matters for you, and which projects are really leading the way here.
Exactly, bringing everything from houses to bonds onto the blockchain. Let's get into it.
Okay, so let's unpack this first. What exactly is tokenizing real-world assets? Lay it out for us.
Well, simply put, it's representing a physical or financial asset. Think real estate, bonds, even art as a digital token on a blockchain.
So you can trade it easily.
Precisely. Tradable 24/7. And this offers some really compelling benefits. First, tangible value and stability.
Because it's backed by something real, unlike maybe some pure cryptos.
Exactly. These tokens are often linked to real income streams like rent from a house or interest from a bond, so you get more stable value, potentially predictable yield.
Okay, and I've heard a lot about fractional ownership too. That sounds big.
It is. Imagine buying, say, just $100 worth of a luxury apartment building or a piece of fine art. It really opens up access. Democratizes things that were previously only for the wealthy.
That makes sense. And what about trading them? Is it faster?
Oh, definitely. That's the liquidity aspect. Assets that are traditionally hard to sell, really illiquid, can now potentially be traded almost instantly. 247 markets.
So no more waiting months to sell a property stake or waiting for market open?
Right. And you also get transparency and security from the blockchain itself. Tamper-proof ownership records, smart contracts, automating payments. It cuts down on fraud and middlemen.
And the tech, the underlying blockchain infrastructure, that's obviously key here. Things have improved.
Massively. We're seeing layer 2 networks like Arbitrum built on top of existing blockchains, or even new layer 1s like Solana. They're making transactions much cheaper and faster.
So that improved infrastructure is really paving the way for this RWA market to scale up.
Exactly. Setting the stage for global adoption.
Okay, this is where it gets really interesting. Let's talk specific projects. First one, maybe? Ondo Finance. Ondo Do.
Yeah, Ondo is a big one, a real pioneer. They're focused on bringing institutional-grade stuff like U.S. Treasury bonds onto the blockchain.
Right. I saw their OUSG fund, the Tokenized Treasury Fund, hit like over $1.3 billion by mid-2025. Partnering with BlackRock, Franklin Templeton.
That's right, offering yields around, 5% annually? Pretty standard for treasuries. But here's a key point. OUSG gives you that yield. The Ondo token itself. That's mostly for governance, for voting.
So owning Ondo doesn't directly give you the treasury yield.
Correct. It's a leader in legitimacy, scale, great partnerships. But expecting 100x on the Ondo token? Probably not. Think steadier, institutionally driven growth.
Got it. Okay, let's switch gears to real estate. Landshare, Landay.
Right. Landshare operates on the Binance Smart Chain. They focus on fractional ownership of U.S. rental properties.
Tokenized houses, basically.
Yeah, they've already tokenized, I think, 4 properties, generating rental returns for token holders somewhere in the 7-9% APY range. And they partnered with Roofstock.
Roofstock, the big real estate marketplace. That could open up a lot more properties.
Potentially thousands, yeah. Now, for their RWA tokens, the ones representing the houses, you need KYC identity verification for compliance.
Makes sense for real estate.
Yeah.
And the land token itself.
That's their utility token.
Right.
It has a burn mechanism, meaning tokens get destroyed, which can link its value to platform activity. It's got a small market cap, so, 100x is highly speculative. But if they really capture a chunk of that online real estate market, it's plausible.
Okay, another real estate one.
Yeah.
Propchain, PROPC. How are they different?
Propchain also does real estate, but they seem to target potentially higher yield niches, things like distressed assets, aiming for maybe 10-14% annual yields.
Higher yield, probably higher risk too.
Generally, yes. More execution risk with complex strategies like distressed assets. It's also cross-chain, running on Ethereum and Solana. An interesting thing is their treasury has been active. They bought back over $1 million worth of PROPC tokens by August. 2025, reducing supply.
Buybacks can definitely help token value, so potential for big gains here too.
Well, it did see something like a 10x from its initial sale price at one point, but again, small market cap, 100x from here. That's a very ambitious scenario, needing huge global scaling of their specific model, but the theoretical potential is there given the starting point.
Right. High risk, potentially high reward. Okay. One more. Realio Network, RIO. What's their angle?
Realio is building its own Layer 1 blockchain, specifically designed for issuing RWAs compliantly. Think private equity funds, real estate, all on their chain.
So they're building the foundational layer itself.
Exactly. It's a smaller project currently, still building out its ecosystem. They have tokenized some assets like a Bitcoin mining fund.
And the potential for RIO.
It's definitely a higher risk play. Liquidity for the token can be thin sometimes, and being a newer L1, it needs to attract developers and projects. But if it becomes a go-to platform for RWA issuance.
Then its current small size could mean significant upside.
Precisely. High potential reward. Plus, you can usually get some staking yield on RIO alongside that speculative potential.
Okay, so wrapping this up, what's the big picture for you, the listener, trying to navigate this RWA space?
Well, the main thing is this convergence is happening. Traditional assets meeting blockchain tech. It offers a really diverse range of opportunities, right? From stable yields like Ondo's treasuries to much more speculative plays on platform growth like maybe Land or RIO.
But it's important to remember, it's still a blend, right? Crypto innovation meets real-world stuff like regulations, managing physical assets.
Absolutely. It has complexities from both worlds. It's not just pure crypto volatility. It's tied to real asset performance and rules.
Ultimately, though, this does feel like more than just hype. Real money, real assets are definitely moving on-chain.
Yeah, it's fundamentally changing investment possibilities. Yeah. And that raises a big question looking forward.
Which is?
In a few years, will we even make a distinction? Will it be crypto assets versus real assets on crypto rails, or will they just become assets managed digitally? What stands out most to you from all this today? Where do you see the biggest shift happening?